Hello everybody, my name is Matt Heise, owner of the College Funding Connection. And if you made your way or found your way to the video here today, then you probably were looking at some information about student loans or education loans. So the theme of today's video is about education loans. I wanted to break it down into some detail and specifics for people to make it a little more understandable, kind of clear up some of the confusion that's been perpetuated out there by the media and various others. But first of all, I wanted to talk about the kind of the three categories of loans. The first category is what we call direct student loans. These would include Stafford loans and or Perkins loans. And then you have subsidized and unsubsidized, and I won't get into a lot of detail about that. But the important thing to understand is that these loans are through the Department of Education, and they are student loans where the student can actually sign for the loan by themselves as long as they have decent credit and they don't need a job. But keep in mind that student loans are capped. And I get this question and this misunderstanding crops up with a lot of the parents that we work with, that there is not an unlimited amount of money that a student can borrow by themselves. It's actually capped right at about $27,000 right now. So once they've tapped that amount over 4 years, and we know that the cost of college over 4 years is much more than $27,000, then they're going to have to look at other types of loans that I'll talk about here in just a minute to basically fill that amount, that gap that is coming, that bill that's coming from the college. So when we talk about student loans, we're talking about Stafford loans or Perkins loans primarily. What's good about them is that the interest rate on the loans are fixed, and the payments then are deferred until after the student finishes college, undergraduate school. And then they can be deferred then if they go on to grad school as well. So payments are not required during college. They're deferred until after college, so that makes it a little bit easier to pay them. The second type of loan I wanted to talk about are Parent Plus loans. And we always have red flags go up when we talk about these loans, and for good reason. These loans can get out of control for parents. The student has nothing to do with these loans, so if you're signing as a parent, you are solely responsible for paying it back. But the problem, and it's actually becoming almost an epidemic now, is that we all love our kids. We want to get them to college or to school. But what we're finding is that parents are really overcommitting with these Parent Plus loans, and I've talked to families that are paying more. The parents are paying more for the Parent Plus loan payments than what they're paying for their mortgage on their house. And this can go on for 10, 15 years for some people. So if you have more than one child, you can kind of do the math. But you don't want to use these as a primary method for paying for college because it can get very, very expensive for you. So Parent Plus loans, parents sign it, students have nothing to do with it, but you'll see these often being recommended by the college as a method or resource to pay the bill to the college. Why do they do it? Well, they're in business, the education business. They want to get the bill paid, and sometimes that's the easiest way for the colleges to do that. The third type of loan I wanted to talk about, or category of loans, are private loans. These are typically copay loans. And when I have had parents or students saying, well, I'm just going to put myself through college, or my kid's going to do it themselves because we're not signing on anything, what they're thinking of are some of these private loan programs. But it's important to understand that most banks are not going to lend that much money to a student without a parent or responsible adult paying or co-signing, on those loans. And that's where it can get a little dangerous again. I've just talked to a family member actually recently that took out over $100,000 in co-signed loans. They signed with their child on the loans. They didn't understand that if their kid can't pay that loan back and they can't find a job after college, the bank will be coming back to them with payments on those loans, and that's just starting to happen right now. So you can imagine that, plus the student taking out Stafford loans. It's a lot of loans that a student might be co-signing for. And again, you don't want to rely on these private loan programs to pay the whole bill. It can get very expensive. But the difference then with the private loans is that they almost always have variable rates of interest as well. So you have the direct loans, which are fixed interest rates, the Stafford loans and Perkins loans. You have Parent Plus loans, which are higher rates than the Staffords, but they generally are fixed rates as well. And then you have the third category, which includes the private loan programs, and they start out at a low rate during the college years. After college, it's a variable rate typically, so just like a variable rate mortgage, it can go up and probably will go up as we see prime interest rates increasing over time. So again, just to recap, we have the three categories of loans: the direct loans, we have the Parent Plus loan programs, and then the third category are these private loan programs. So just kind of the lesson for today, the takeaway is to make sure you understand what is being recommended by the college, and make sure you understand what you're committing to before you actually sign on the dotted line with these various loan programs. So hope that the information was helpful. Check out our YouTube channel if you want to look at any other information. We have various educational resources here. If you want to contact us, you'll see a link to our website below that has our contact page. Fill in your contact information if you have a more specific question. Happy to answer or talk with you in person and help where we can. So until then, best of luck with your college plans, and thanks for watching today.